Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. Anthony Power and I just returned from Fort Lauderdale, Florida, where we were taking part in the Mining Disrupt 2025 conference. In today's video, we wanted to share with you one of our favorite panels from the event entitled IPO 101 for Bitcoin miners. We hope you enjoy. Before we get into it, take a second, smash the like button, you guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below if you were at Mining Disrupt this year, what you think of the panel and the discussion, and your outlook on the Bitcoin mining space as a whole for the remainder of 2025. Now, with that being said, let's get into today's video.
Is the tables have turned. And you see Wall Street coming to our door. So for our next panel, I kind of want to call it Wall Street versus Main Street. We've got a lot of the big analysts from the large companies on Wall Street. And it's going to be in a grassroots versus, we have some grassroots analysts as well. So the next topic will be an IPO 101, what analysts look for when they want to go public. So I'm going to welcome our moderator up to the stage. Yeah, and then just invite him.
Hey, good morning, everyone. I'll call up the panel here. This should be a good one. We've got a lot of industry experts up here. First is going to be Ruben. Come on up.
Ruben, thank you.
Some fans in the audience for you there, Ruben. Anthony, come on up, buddy. Then we've got Kevin Dede from HC Wainwright and Matt Sigel as well on the panel.
Thanks, Bryce. Thanks, Bryce.
So as you can see, Anthony and I are matching here. We both work with Power Mining Analysis. We're the largest online platform for Bitcoin mining specific data for the pubcos. We're joined today by some of the top experts from Wall Street. So we've got Stifel, Ruben from Stifel, Kevin Dede, and Matt Sigel as well. So looking forward to this one. To start off here, you guys, maybe we'll start on the far end with you, Ruben, if you can just introduce yourself, what you do and how you got into the Bitcoin space here.
Yeah, no, I appreciate it. I'm Ruben Sahakyan. I'm Managing Director and Co-Head of Digital Assets at Stifel KBW. We're an investment bank. We provide cradle-to-grave services for companies, raising funds, taking the companies public, helping them with acquisitions, mergers, and then eventual sales of the companies. We have research on our side as well, sales and trading, so full investment banking team. I got into the space. I used to work for a big bank called TD Bank. Everybody has seen the signs of TD. It's a very traditional bank. You know, I started working on Bitcoin in 2013, 2014. The company was very, let's just say, not so positive on it. So I went around the Bay Street, which was in Toronto, and asked around, and I found a company willing to work on crypto. It was GMP Securities that ended up being acquired by Stifel, and I've been working professionally in the space since 2017. You know, first company I took public was Hive and Hot 8, and then since then I've been doing the investment banking since then.
Awesome, Anthony. Who are you?
I'm Anthony Power. I'm the CEO of Power Mining Analysis. My background's slightly different from everybody on the stage. I was a soldier for 25 years, and I'm a qualified chartered accountant, so I do understand the finances. End of COVID, I got really bored and slipped into the Bitcoin space, probably by mistake. I bought a mining stock, didn't really know what I'd bought. The share price rallied, and I started to look into why, and hence started to cover a lot of the miners in the space from 2020, about 5 years ago. About 18 months ago, I met my business partner, Bryce. We formed Power Mining Analysis, and we cover probably about 15 of the largest public Bitcoin miners out there. In terms of what we provide, we have a website with a lot of data on there, more information about Bitcoin mining. It's pretty much our niche area. We cover a lot of podcasts. We did, I think, nearly 300 in the last 15 months, of which at least 80 were interviews with all the big CEOs and the big directors of some of the biggest mining companies in the world. So that gives you guys as retail investors the opportunity to hear. And I don't really know if any other industry has this, where the CEO is prepared to come on a podcast fairly regularly and be grilled by a couple of YouTube influencers to give you a first-hand view of sort of like what's happening. We're not there to get the private stuff, but we really try and drill down into some of the operational stuff. But yeah, we've been going for about 18 months. Looking forward to this year. Looks like it's been a great year, and it's a pleasure to be here. Thank you.
Good morning, everybody. My name's Kevin Dede. Like Ruben, I'm in the institutional side. I'm a research analyst at HC Wainwright, and was the first guy on Wall Street in the States to write on the crypto space back when Riot came out in 2018. First to cover Marathon and a whole litany, Moss and Argo. But real kudos go to the founder of my firm. He opened up the capital markets, and at least in the U.S., I have nothing to take from Ruben on that, but in the U.S., nobody wanted to touch crypto stocks because it was basically like cannabis. My banker, Craig Schwabe, was able to get a deal done for Riot. I think it was sort of the latter half of 19, and he deserves so much credit for it because finding investors was pretty easy for him, but finding somebody to clear the stock was a completely different story. I think he went all the way to Korea to get it done. But that opened up the floodgates. I think we did $2.5 billion for Mara and $1 billion for Riot, or $1.5 billion for Riot, and $1 billion for Bitfarms and Hut 8 and DMG and assorted other companies down over the years. So that's really the claim to fame. HC Wainwright opening up the capital markets. It wouldn't happen though without me, getting my foot in the door. So I'll take a little credit for that.
Good morning. Matthew Sigel at VanEck. VanEck is a family-owned asset manager based out of New York City with about $120 billion in assets. Our DNA is in gold and gold mining stocks. We run the world's largest gold mining fund. So we were worried about getting disrupted from Bitcoin and started investing off our own balance sheet 8 years ago, and now have a number of strategies, including a Bitcoin ETF. We have an equity ETF called DAP. So we show up as a top 10 shareholder for all the public miners. And we have a new strategy that, if approved by the SEC, will make us more active in Bitcoin mining and other related stocks. So I'm head of research, run one of those strategies. Thanks for having me.
Most definitely. It's an honor to be up here. I've always wanted to be a Wall Street analyst, so it's great to sit alongside you guys. The first question here, you guys, or the topic, I guess, IPO 101. What do analysts look for in publicly traded Bitcoin mining companies? The first question I'll throw to you, Anthony, is the key financial metrics. We cover a lot of these on the platform, the channel. What are the key ones you look for?
Yeah, for the last 3 years, I've been writing articles on behalf of Compass Mining. My next article will be my 100th. And every month I produce a monthly article highlighting the operational metrics for, as I say, 15 of the largest miners. And I talk about, their operational ability in terms of their hash rate, their operational hash rate, their utilization, all those sorts of operational metrics that you want to compare to see who's performing better. But I always take that with the fact that, when you're looking at metrics, you can't take one in isolation, because I can sit up here and I can make a case for 15 or 16 different miners and showcase that they're the best miner from that particular metric. You have to really go through and look at all the metrics. When you're looking at mining companies, in the first instance, two things spring to mind straight away. One of the largest costs a miner faces is the energy price. The energy cost is so important. So these big public miners and miners that want to go into the public space are out there trying to get their hands on the cheapest energy available. And we are seeing now, a sort of a gap forming across the mining space as to which miners are able to attract the cheapest rates. Because it's so important, it's the biggest cost. And every halving, that energy cost doubles. the revenue doesn't double, the revenue reduces, but the energy cost doubles effectively. So you've got to go and source the cheapest energy. And I remember, I think it was Fred Thiel a few years ago said in maybe 3 or 4 years' time, mining will have to be done free in terms of energy, because there's no way it can continue to drive that level of cost when the revenues aren't reciprocal. We had the halving in April last year, literally a year ago, and the Bitcoin price today, I haven't looked today, probably 87,000 or something like that. It's not a great price for the mining sector. It sounds like it's a good price, but believe you me, as we'll find out in the next quarterly earnings, which will be due post the 31st of March, it's going to be challenging for the great majority of miners for that first quarter of the period. So energy is a big issue. I look at efficiency. So if you haven't got the cheapest energy, what you should be aiming for is having the most efficient fleet. And we've got a number of, I can see around even now, there's a number of miner producers here like Bitmain and Bitdeer and Canaan. And they're all racing to get the most efficient miner onto the market and get them out there, because if the efficiency is that low, it can drive your cost of energy, that biggest cost, down. And if I use an example, I'll use the example because it's within the mining sector at the moment. I think IREN, they have sort of like the best of both worlds. They probably have close to the cheapest energy in Texas. They're taking full advantage of the Texas energy prices. They're not on a PPA. They're on a sort of like the market rate, but they're using the market rate when it's appropriate to mine. But they also have the most efficient mining fleet, and they have a sizable mining fleet. I think it's 31 exahash, growing to 50 by the end of June. So those two factors really are what miners should be trying to achieve. I'll let some of the guys talk more about the financial side of it, the metrics there, because they're equally important. And as I say, from a perspective, never take one in isolation. You could have the greatest efficiency, the lowest cost, but if you're paying yourselves high wages and your G&A costs are significantly high, that can ruin it for shareholders as well, because you want to make sure everything's kept as lean. I'm a management accountant, so I look at every cost. I'm trying to reduce all costs all the time. And when I see some of the updates that come out, it sort of like makes me wonder, could I be in there doing a slightly better job sometimes instead of some of these CFOs that I see? But G&A costs need to be tighter, because otherwise you're going to struggle to make any profits.
That's great. Kevin, maybe I'll throw it to you next. From your lens, what are you guys most concerned with in terms of the key financial metrics?
Okay. There's a lot to unpack, Bryce, because I don't necessarily go to financial metrics first. Absolutely a concern always, right? I'll borrow a quote from Fred Thiel. He said, you want to look at companies in terms of their capacity, their compute, and their access to capital. And I think that's really the way to size it up. I think from a broad brush. Secondly, or maybe even more importantly, is management team's flexibility. And I know maybe we'll plan on talking about more of this later, but to me, that's really the essence of it. Anthony touched on this. If you look at hash price, I've been covering this space since 2018. So you look at hash price and the lows, it's gently approaching an asymptote that's close to zero. And that's why Fred said that you need zero cost of energy. So if you're battling a hash price, you're right, Anthony, you need all that efficiency. But above that, I think you need flexibility of thought. And you've seen some huge pivots in this space. It's been transformational over the past 12 months, right? Bitcoin mining is important. I'm not going to knock it. It's great for developing renewable energy. It's great for support of the grid. But public companies have to answer to their constituents, and that's with money. And it's tough to do it in this space. It's hugely capital intensive. So we look at a lot of things, and probably most importantly is like management's flexibility. Back to you, Bryce.
That's great. Now, you mentioned the access to energy, the price of energy. So maybe, Matt, I'll go to you. Can you talk to us a little bit about how important the energy strategy these miners use is for you as an analyst?
Yeah. This is honestly one of the hardest sectors to invest in and cover because it is truly a commodity business that is extremely capital intensive. So the usual boxes that you're trying to tick as a public equities investor, you want profitability, you want growth, and you want some type of like sustainable competitive advantage, a moat, right? And on that last point, by definition, a Bitcoin miner doesn't have a moat. So there's many ways to create one. It can be through access to ASICs. It can be through cheap energy. It can be through a great team that is just faster and better at uncovering sites and executing on purchase. I think those are some of the choices that the miners have to differentiate themselves. I agree that the flexibility, especially given the AI pivot, was important, but we're actually looking for a more stability in the philosophical view around what it means to be a public company, what type of capital structure are you going for, what is that edge that you have, and then under what circumstances will you abandon it for a better opportunity or not. And it's really, I think, the communication more than the financial metrics. I mean, we've seen the efficiency. Yes, IREN is best in class, but if you look at the dispersion of the efficiency of these miners, a year ago, it was hugely dispersed, and now they're all basically at the same efficiency rating. So they're not competing on that anymore. So not a great answer to the question, because it's a very tough business.
There's no easy answer, my friend.
There isn't. And we're going to talk about that HPC AI pivot in a second here. Ruben, I see you nodding your head down there. Any comments on those first two?
On HPC AI or the
on energy
trading
strategy and the key metrics before we get into HPC?
So, I mean, energy strategy is very important. So let me walk into from an investment banking perspective, because the panel here has been on the research side of things. If you're thinking of the panel being IPO, going public, energy strategy is extremely important. Where you get your energy, how you manage your energy, access to the energy, and your ability to actually grow that energy. A lot of companies will come out and say, I have 50 megawatts or 100 megawatts of capacity. But what's your ability to go 100 to 500? If you're a public company, most important is capacity, as already been mentioned. But to get the capacity, you need access to capital. And to get access to capital, you need capacity. It's a bit of a chicken and egg situation. People love the fact that the companies are getting larger. But in order to get that large capacity, you need a lot of capital to deploy it. So that comes into then energy trading, energy management. What's important is your ability to actually, if you have no access to fixed PPA, which is your power purchase agreement, you need to have the ability to trade that. Either that's hedging or being able to meet the demand loads. And that requires teams. And what we look for actual energy trading teams. And some of the miners will have that. If they don't have fixed PPAs, it is very important to have those kind of teams on at the company in order to manage it.
Now, you guys have both talked about the importance of management teams and flexibility. I wanted to touch on that one for a second. As investors and people looking at this space, you said flexibility is the most important with management team. Can you talk to us a little bit about what that means, Kevin?
Sure. It's an ability to solve problems, and what I always look for it. And listen, I'm not really sure exactly how Matt feels about this, but when you look at a small cap company, it's 95% the CEO. And you have to, as an analyst, that's me, or an investor, look at that person's ability to see the future, to see around the corner, to see places that are dark and basically uncovered. So as much confidence as you can find in a management team's ability to anticipate and be proactive in managing change, right? This is crypto. There isn't one day that's like any other in its history. And that just continues to go that way. Don't see that changing as much as VanEck would like to see consistency. But I jest. I think that the pivot, as we alluded to earlier, Bryce, is demonstrative of that thinking, right? How to maximize the power assets, how to generate the consistent returns for shareholders, and also have giving you better access to capital, because those consistent cash flows open up a lot of source capital that the irregularities in Bitcoin mining exclusively don't allow.
That's great. Matt, what do you guys specifically look for with management teams? Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now.
Well, having lived through a couple cycles now, I look for management teams that are allergic to debt. They're kind of hard to find in this sector, right? But the average peak to trough decline in the mining stocks last cycle was 94%, and like a number of them went bankrupt because they levered up. So, the other side of the sofa here is, bringing this paper to the market and hoping that we buy it. And, we're looking for, more bootstrapped organizations that can reinvest their own capital profitably. I get it that when the times are right, people, management teams think that they can get a premium for the stock by levering up to buy Bitcoin, but I can execute that strategy myself. I don't really need the miner to do it for me. An allergy to debt would be one thing that we look at.
That could probably be a panel by itself. Anthony, you talked about the importance of access to cheap energy. We've seen the miners literally go all over the world to find this. Can you talk about analyzing these from a geopolitical geography standpoint as well?
Yeah, we see a number of miners not just stay in North America, but pivot towards the likes of Paraguay. The miners in Iceland, Sweden. Not so much in the other parts of Europe. I mean, I come from the UK, and our energy prices, you couldn't switch on any miner, irrespective of just to heat the room. We're paying 30 cents plus per kilowatt hour. The miners in Texas probably aiming to try and get as close to 3 cents. If you're paying maybe more than 5.5 cents at the current revenues that you're achieving, that could be a problem with your other costs if they're significant. But we're seeing the global hash rate increase continually. And we always, at the start of the year, when we get a mining CEO on, we'll sort of ask them, where do you think the global hash rate will be at the end of the year? And they'll give their view, and they're usually miles away. It's been growing incessantly for, the last 4 or 5 years. Ever since China banned and it went down, I think, to like 60 exahash. Well, today, the 7-day moving average is probably around about 810 exahash. And that's growing, growing still. So there are mining companies, it might be private mining companies, trying to find, stranded energy, cheap energy. There's a lot of miners moving into sort of like wind farms now. Marathon just bought a wind farm. Soluna Holdings, one of the smaller miners, but do things very creatively. Try and get access to cheap power, put together projects together, and then try to deliver a project sharing the sort of like the capital outlay and sharing some of the profits, because it's a real challenge out there. They've already touched on the fact how difficult it is to raise capital. Miners have got to get a bit more ingenious. And even those that ventured into some of these European areas like Sweden, like Iceland, there are challenges in those areas now. I think in Iceland, I'm not sure the government's fully in favor of Bitcoin mining, so that could cause a problem for anyone trying to move into Iceland. In Sweden, they were hit with extra tariffs. We're hearing Finland's got some good prices if you can show that you can utilize the heat for a secondary use. That looks at more favorable. Africa's obviously Ethiopia and some of the other African countries have been very popular in recent years, but as soon as they become popular, they become unpopular, and things don't happen forever and ever. If people realize there's money to be made, things like corruption start coming into the fact, and it starts becoming a sort of a challenge for any public or non-public miners to continue delivering in them sort of regions. But miners are continually looking to source the cheapest power. I mean, the interesting one was when they went to Abu Dhabi. I mean, the last place on earth you'd expect to go and do Bitcoin mining when it's 50 degrees centigrade during the day. But Marathon went out there and set up a joint venture. And the fact that, Abu Dhabi is a hot country, it relies on a lot of air conditioning. It relies on a lot of air conditioning during the day, not so much at night. So mining occurs when the air conditioning is not in great shoes and the power's available. And one thing we know about miners, if there's power available, let them use that power to balance the grid and, make use of the power in a positive way, but provide revenues to those areas to deliver the economy in those regions. And that's what miners are very good at.
Great, Anthony. Now, Ruben, I'm going to go to you next. As we just heard from Anthony, miners are operating all over the world. We've also seen a lot of them re-domiciling their headquarters into the United States. I know Hive just did that as well in the front row here. Can you talk to us from your perspective? How important is it to have your headquarters in the United States based on the regulatory environment right now?
Yeah, no, I'd say it goes, and there's few reasons to be in the United States. It's the why do companies going public in the United States? It's the access to capital and the liquidity and the depth of the capital. In order to access that capital, you need to be domiciled in US, because in order to get that capital you need to be included in indices. In order to get included in indices, you need to be domiciled in the United States. Headquarters and be domiciled. Those are two separate things. You have to have your headquarters moved, and you have to have your taxable domiciled entity in the United States. And once you do that, you get added to a bunch of indices. And once you get added to indices, it means you get passive capital. It's not the active capital that Kevin and Anthony here will be pitching. It's the passive capital that ETFs, that you and I will go and buy, Russell 2000. And as part of that, you'll get access. The Russell 2000 will buy that miner. And when you do that, the liquidity increases, the share purchase increases, and there's volatility increases. And as volatility increases, your ability to raise capital increases. So it's very important to be in the United States. There are sort of it's not just black and white. It's great to be in the United States. And there are, significant, costs to the United States. It's important to know that, once you're in the United States, you're part of under SEC supervision. And being SEC supervision is great, but that means you're also going to have to be at a higher reporting costs. And right now, it's great to be in the United States. 2 months ago, people might be going to jail. Now they're all going to, they're all going public, right? So the administration change can be very quick and very significant in terms of the shift. So, it's important to be in USA, and so capital is very important to be. As a company, you should be looking into the United States.
Yeah, great answer. Kevin, we were just in New York together for the Bitcoin Investor Week. There's a lot of attention on Bitcoin mining right now. Obviously, a lot of that is policy, regulatory related with the new administration. Can you talk to us a little bit about how you've seen this change over the last few years?
Sure, Bryce. Matt was there too. So
always
have, yeah. You weren't? Oh, your boss. Right. Sorry. We were, okay. That's a side note. We're all well-traveled. The thing that's really interesting about that is that the SEC came out, I think it was last week, and said, hey, Bitcoin's great. Not that people were really worried about it, because there'd been a lot of public companies operating throughout the U.S. under that assumption. But that's been clarified, so that's removed a huge overhang. But even more telling, I think, are the lawsuits the SEC had waged that have been shelved. And I think that leaves people a little easier to sleep at night, knowing that, the van isn't going to show up in the middle of the night and handcuffs are going to go flying on. So I think that just sends a really strong message that obviously Trump is working to fulfill his campaign promises in creating a very crypto-friendly environment. And we saw lots of developers fleeing to Singapore. This is a software side, and for the can I say shitcoins on here? Just the shitcoin side of things. And I think we're going to start seeing a lot of that development come back. And I think, to Ruben's point, this is a great place, access to capital. Your capital has liquidity, lots of room to grow. Lots of environments are more friendly than others, like New York, California, maybe not so good. Wyoming, Texas, and even Pennsylvania and Kentucky now are shoring up. So lots of opportunity here.
There definitely is. Matt, we made reference earlier to some of the miners shifting over to HPC AI. This is a big trend we've seen in 2024, continue into 2025. Can you give us a few words on that?
Yeah, we've been very supportive of these pivots. The reason is that the single biggest variable in a company's stock price is their cost of capital. If you're going to model a company, the discount rate you use just makes so much of the difference. And the fact is that the cost of capital for a HPC data center company is just so much lower. So it's really a great opportunity for miners to diversify their revenue streams. Both industries are fast growing, but potentially very volatile. So by combining them, the volatility should fall and the market should reward a higher multiple on the earnings. So I realize that not every Bitcoin mining facility is appropriate for that pivot. There's a lot of additional capital investment that needs to be made. And it's really a new mindset to go from an industry which has no customers to one where the customers expect, 5 nines of reliability. So not discounting how difficult it is, but for the companies with the right assets, we thought and still think that it makes a lot of sense to diversify and explore that opportunity.
Yeah, we definitely agree. Anthony, this is something we've talked about extensively on the channel. Why are so many miners making this jump?
Yeah, I mean, the difference between the HPC and the Bitcoin mining, you've got one that's volatile revenues. Bitcoin is volatile. I can't say the price in an hour's time, tomorrow, next year, and neither can anybody in this audience. With HPC, you have far more predictability. Predictability of revenues. You sign a contract to deliver high-performance computing. The contract will determine the revenues that come through. Hence, why the lower cost of capital for that particular business model. Banks, institutions will offer debt at far more reasonable rates for high-performance computing than they will do for Bitcoin mining. I mean, I go back to 2022 when some of the miners were paying 18, 19% interest rates, borrowing against ASIC miners, which they paid high levels of costs for, maybe $60, $70 a terahash. And when the Bitcoin price fell, the valuation of those mining machines fell as well. So it was like a double whammy for the mining companies. That's not necessarily going to be the case for high performance computing. I mean, we have to assume it's here to stay, and not just maybe like we had a bubble back, 30 years ago. But from what I've seen up to now, it looks like it's a technology that is here to stay. Miners are definitely pivoting into this because it does provide a great revenue stream, and it's good to see that the miners are not sort of like trying to rush in there and deliver massive sites all of a sudden. We've seen a lot of miners who are doing things on a smaller scale because really they've got to learn how to deliver high performance computing. It's not the same as Bitcoin mining. Yes, they are effectively data center managers and they'll manage the data centers, but there's far more technical requirements to deliver HPC. Plus, you've got to have a totally different staff to deliver HPC. Bitcoin mining, you don't have to get salespeople in. You produce Bitcoin mining and you can either hodl it or you can sell Bitcoin mining. High-performance computing, you've got to bring in a sales team to deliver customers to use your facilities for high-performance computing. Unless you manage to nab a hyperscaler and just provide the facilities and let them go and do their own GPUs and manage it from themselves, they're few and far between. There are some miners who've managed to land contracts like that. But a lot of the miners are starting small, deliver that model, prove to the industry that you can deliver high-performance computing, and then ready to ramp up into bigger sites, literally, a short time after that. And we've seen quite a few miners who are doing that now, ready to pivot to bigger miners because of that predictability that we can see from the likes of the big contracts that have been awarded up to now. The numbers that have been talked about make it far more, a good business model for the miners to take. And going back to management teams pivoting, obviously I was at the Corsicana site last year when they said, we're a pure play miner, we're not going to pivot into HPC. And lo and behold, 6 months later, They're now going to use 600 megawatts at
Activist investors help instigate that.
There's nothing like a low stock price to catalyze a change of opinion.
But it is a change. It still has to be a change. Yeah. So that's the pivot across there. But I'm very much bullish on the miners that have pivoted. I think it's a good opportunity for them. Yeah.
Great answer. We've got about a minute left. I'll give any closing thoughts. Maybe Ruben, we can start with you. We'll work down towards me.
All right, that's a good question. Look, I think most importantly, the panel has discussed here a number of different views. But to go public, I'd say in terms of IPO 101, and what's important is execution by the management team. It's been highly discussed. Execution, willingness to change, willingness to adapt, and willingness to be able to react. That's very important. And the other important factor remains that United States continues to be probably the most open and the place to be in terms of going public. So if you're a public company or if you're a private company looking to go public, the United States continues to be this place to be. So that's kind of where my closing remarks are.
I just have one thing to add. If I was to select one metric, I would go to the when the earnings come out, go to the one line that says net income or net loss. That's the line you need to be looking at from a business perspective.
Change in retained earnings. All right. So Bryce, I'm going to make sure that everyone here who's deeply involved in Bitcoin knows that despite all this HPC rhetoric that you hear from all these public companies, Bitcoin mining is not going away. Not every site can address HPC. There are different types of HPC, like there's model running, there's inference. Inference is going to drive the industry, and you'll see that business suck up a lot of power near metropolitan areas. But the commitment to capital to build a huge HPC site has to be assured that there's that access to capital and a long stream of revenue and earnings. So you can't necessarily guarantee that if you're going to be running LLMs.
For Bitcoin miners, minimal debt, minimal dilution, clear communication strategy from the CEO. Find your edge and remind us about it all the time. That's all.
There you go, you guys. Thanks so much. Let's get a round of applause for the panel here.